Hey everyone, and don't forget to hit subscribe and give this video a like if you enjoy it. This week, we're looking at Federal Reserve Chair Jerome Powell's semi-annual testimony before Congress.
Yeah, always a big event.
Always big.
It gives us insight into the Fed's thinking on monetary policy, and I think everybody wants to know what's coming next.
Yeah, it's like getting a sneak peek behind the curtain of the U.S. economy.
Uh-huh.
And this time, Powell's message was pretty clear. The Fed's in no rush to cut interest rates anytime soon.
Yeah, and that might seem a little counterintuitive
because
inflation has been cooling down.
Right?
But Powell had a very specific rationale for this cautious approach.
So walk us through it. What's the logic?
Well, first off, he emphasized the strength of the economy right now.
Okay.
It's making progress toward the goals the Fed has set.
So no sudden movements when things are going pretty smoothly.
Yeah, precisely.
Okay.
Now, remember how overheated the labor market was not too long ago? Well, it's showing signs of cooling down, which is actually a good thing.
Right. A balanced labor market, sustainable economic growth.
Exactly. And we can't forget about inflation itself.
Yeah.
Powell pointed out that it's moved much closer to the Fed's target of 2%.
So they're seeing progress. I guess cutting rates now could risk throwing things off.
Yeah, that's the concern. Powell stressed that the Fed's in this really tricky balancing act.
What are the two sides of that balancing act?
Well, on the one hand, if they cut rates too quickly, they could undo all the progress they've made in taming inflation.
Right.
Imagine prices going crazy again.
Nightmare for everybody.
Exactly. But on the other side, if they move too slowly on those rate cuts, that could weaken the economy.
Okay.
You could see businesses hesitant to invest in high, potentially leading to job losses.
So trying to find that sweet spot, keeping inflation in check without stalling the economy or job growth.
Exactly.
High stakes.
Absolutely. And Powell emphasized the Fed's commitment to a data-driven approach to navigate all this.
So constantly watching the economic dashboard, making adjustments as needed.
Exactly. They're taking in all the data from inflation numbers to employment figures.
Okay.
And they're carefully weighing the potential consequences of every move.
So not a set it and forget it approach.
No, constantly recalibrating. Powell's testimony really highlighted the Fed's dedication to its dual mandate.
That's maximum employment and stable prices.
Exactly. Constantly trying to achieve both.
Tough job.
Yeah, absolutely.
Constantly adjusting, reacting, trying to predict what's coming next.
There's no crystal ball, unfortunately, but the takeaway from Powell's testimony is that the Fed is taking a very cautious, deliberate approach.
I feel like we're seeing a slight shift in their thinking. Almost like they're saying they're okay with a little higher inflation if it means keeping the economy strong and people employed.
You're right. It seems they are prioritizing a strong economy and job market, even if it means letting inflation run a bit hotter than they have in the past.
That's a big statement.
It is.
Raises a lot of questions.
Absolutely. The potential consequences of this approach are huge.
Yeah.
Both for individuals and businesses, and that's something we need to unpack carefully. So we've talked about how the Fed might be willing to let inflation run a bit hotter than usual.
To keep the economy strong.
Exactly. But that raises the big question, what does that mean for people and businesses in the long run?
Yeah, what happens down the road?
Well, one thing to think about is that if the Fed keeps interest rates low to help the economy grow, we have to consider the possibility that inflation could become a bigger issue.
Like adding fuel to the fire. Could we see prices rising faster and faster?
It's a real worry. When interest rates are low for a long time, it encourages people to borrow and spend more.
Right.
And that can definitely push price.
Supply and demand, right?
Exactly.
More money chasing the same amount of goods and services equals higher prices.
Exactly. And don't forget what that does to people. Higher inflation eats away at their purchasing power. Their money just doesn't go as far.
Especially for people on fixed incomes or who haven't been able to save much.
Right. Their expenses could start to outpace their income.
That's a big worry.
It puts a strain on household budgets.
Yeah.
And businesses feel it too. They might have to raise their prices to cover their own costs.
Right.
And that could lead to people buying less.
So it's a domino effect.
Yeah. Higher inflation squeezes both consumers and businesses.
And that could slow down economic growth.
Exactly. That's the risk a Fed is taking. They're betting that the benefits of supporting the economy now outweigh the risks of higher inflation later.
A calculated gamble?
Yeah, and only time will tell if it pays off.
So we need to keep a close eye on inflation, employment, economic growth, all of it.
Absolutely. Things can change quickly.
Right. The Fed might have to change course depending on how the economy reacts.
Exactly. There's no simple answer here.
No magic bullet.
No, economic policy is constantly evolving. It's about adapting to the changing environment.
Like navigating a ship through rough waters.
I like that analogy.
You have to adjust to the winds and the currents.
It's a good way to think about economic policy making.
Powell's testimony really showed how complex the Fed's decisions are.
Yeah.
It's not just about interest rates. They have to think about the impact on everything.
Absolutely. Inflation, employment, growth, financial stability. It's a lot to consider.
So for the average person trying to understand all this, what's the takeaway?
I think the most important thing is to stay informed.
Okay.
Pay attention to the news. Try to understand how the Fed's actions could affect your own finances.
Should people be worried about higher inflation?
It's always good to be aware of the risks, but don't panic.
Okay.
The Fed is watching the situation closely. We'll take action if inflation gets out of hand.
So be prepared. Make informed decisions.
Exactly. Stay informed, stay flexible, make smart choices. That's the best advice I can give.
Great advice. Thanks for breaking all this down for us.
My pleasure. That's what we're here for.
And that concludes part 2 of our analysis of Jerome Powell's testimony. In our final part, we'll shift gears and examine some of the specific questions Powell fielded from lawmakers during his appearance before Congress.
Things always get a little spicy when the lawmakers get involved.
Talked about the Fed's thinking, the potential long-term impacts.
Right.
Now let's dive into the Q&A portion of Powell's testimony.
Yeah, where things get interesting.
This is where lawmakers got to grill him on specific issues.
Yeah, you really get a sense of what's on their minds.
One thing that kept coming up was trade policy. Lawmakers wanted to know how those tariffs are affecting businesses and consumers.
Right. Trade tensions have been high.
And those tariffs can really impact prices and supply chains.
For sure, it creates uncertainty for businesses.
Makes them think twice about investing and hiring.
Exactly. Powell acknowledged that.
Yeah.
He said those tariffs can create headwinds for the economy.
Makes it tougher for businesses to operate.
Absolutely.
He also got some tough questions about bank capital requirements.
Oh, yeah, those rules about how much money banks need to have in reserve.
Right, to make sure they can weather a financial storm.
Those are important.
What were lawmakers worried about?
Well, some argued that the regulations were too strict,
Okay.
especially for smaller banks.
Interesting.
They thought easing up on those rules could encourage more lending.
Which could boost the economy.
Exactly. But of course, there's the other side of the argument.
That keeping those regulations strong is important.
Right, to prevent another financial crisis.
Like we saw in 2008.
Exactly. It's a balancing act.
So where did Powell land?
He stressed the need to find that balance. He said safety and soundness of banks is critical.
Yeah.
But also that banks need to be able to lend to support economic growth.
Sounds like he's trying to find that middle ground.
Yeah, threading the
He
need.
didn't really take sides.
No, he acknowledged both sides of the issue.
And of course, monetary policy itself was a hot topic.
Always is.
With inflation cooling down, some lawmakers probably pushed for rate cuts.
To give the economy an extra boost.
Right, but others might have been worried about keeping rates low for too long.
Yeah, could lead to asset bubbles or inflation coming back strong.
So what did Powell say?
He stuck to the Fed's commitment to making data-driven decisions.
Okay.
They're going to keep evaluating the economy and adjust policy as needed.
No promises, no predictions.
Nope, just a commitment to responding to the data.
And he stressed the importance of communicating clearly with the public,
Transparency is a key.
especially when it comes to the markets.
Absolutely, you don't want to spook investors.
Powell's testimony gave us a lot to think about.
It did.
It's really a window into the Fed's thinking.
And how they're approaching these complex economic times.
Reminded us of the tough decisions policymakers have to make.
No easy answers.
And it highlighted the importance of staying informed.
Absolutely, knowledge is power.
Thanks for joining us as we explored this fascinating topic.
It's been a pleasure.
Remember, staying informed is the key to making good financial decisions.
Couldn't agree more.
We'll keep you updated on the economy and all the events that shape it.
We'll be here.
Until next time, stay curious, stay engaged, and we'll see you soon for another deep dive.